All right, good morning, everyone. It's Dima Khoury with Compass in Burlingame. So today is today is October 17th, and we're halfway through October, and 2.5 months are left to close 2020. So let's see how we're going to close this very interesting year. And to start with, as always, I'm going to bring you real estate market update and what has been going on in the past week in San Francisco and in the US market. And as always, I start with the interest rates. We're still at a very historic low levels. We're at 2.88%. So it's such a great time for buyers to go on the market and buy, especially in San Francisco market, because property values are very stable. Some of the property types are slightly going down with the low interest rates. So this is really a good time to buy in San Francisco. And for the sellers, also, it's such a great time to sell because there are some good number of properties on the market, but it's like property values are very stable, slightly going down. So this is really the right time to sell if you're thinking of selling. So let's look at, in general, what's happening in the US market. So let me share my screen with you. Okay. So again, interest rates are 2.88 for 30-year fixed. We're at 2.44 for a 15-year and 2.9 for a 5-year ARM. Now, in the US market, so this is a snapshot of year-over-year changes in key metrics like showings. Percentage of showings this year have increased 61% or 62% in the US, and purchase applications have increased 22%. The properties that are going in contract or pending are 24%. Existing home sales is 10% more than last year, and new construction homes are selling 43% more than they were selling last year. We can see here that there is more demand and more activity on the new construction than the existing homes. Now, looking at the inventory, we have lower inventory by 39% for the existing homes, and new construction, we have 33% lower than last year. Now, looking deeper into the inventory and how is this affecting whether it's a seller's market or it's a buyer's market. So we can see in today's numbers, we're around at 3 months. So we need 3 months to sell all the properties that are on the market, which means that we're in a seller's market. We're still in a seller's market. And we're gonna see also the numbers specifically for San Francisco. It still shows that we are still in a seller's market. Yet, having said that, it's such a great time for buyers, again, to lock in great interest rates and go with lower mortgage monthly payments for the same property value. Now, we can see also that in 2006, 7, 8, and 10, we had way more inventory. We had, it was a buyer's market, and properties took longer, way longer to sell. So in 2010, it took properties almost 12 months to sell a year, which is a huge number. Now, what's making it also a strong seller's market is looking at the equity. And I'm going to also show you another chart specifically for San Francisco to prove these numbers. So the percentage of homeowner equity in 2020 is really big. This is very powerful. So we have 42% of homeowners have 100% equities in their homes. 60 to 99% equity is 16%. So 16.6% of the homeowners have 60 to 99% equity, and 12.5% of the homeowners have 40% to 60% of equity, which means that these are very strong sellers. If they go on the market and they don't find the right buyer, they don't get the right number, then they are willing and capable of pulling the property off market and waiting for the right time or maybe the right buyer. And then we're going to see another chart again to show us how this is working with San Francisco. Now let's look deeper into San Francisco numbers and let's see what the activity was last week. So the total number of properties that came on the market are 225, and 133 of them are condos. The number of properties that went in contract are now pending during last week are 151, and 88 of them are condos. And the number of properties that sold or closed escrow are 84, and 41 of them are condominiums. And the number of properties that came off market between withdrawn, expired, or canceled or on hold are 59 properties, and 40 of them are condominiums. So these numbers are very similar to the previous week's reporting. So which means that there's the same kind of the same activity. We see that there's slightly more activity happening in the condominium market. Now, looking at the absorption rate for the single family homes, so we have a month, the absorption rate for the single family homes is 1.7, which means that we need a month and almost 21 days to sell all the single family homes on the market. For the condominiums, we're at 3.6%, 3.67, which means that we need 3 months and around 20 days to sell all the condominiums on the market. So comparing this to the national numbers, so if you remember the chart that showed that today's market, the inventory is at 3 months for the US. So for the single family homes, we're at 1.7, which is even lower than the national number, which makes it a strong seller's market for the single family homes. And for the condominiums, we're at 3.6. So we're at exactly the number of the national number, yet we're still a seller's market. Now let's look at more charts specifically for San Francisco market. Okay, so this chart shows us the market supply and demand. So we can see that there's more supply for the condominiums and loft than the single family homes, and it is increasing. The supply in the market is increasing for both types of properties. Now, the active number of active listings on the market for both condominiums and single family homes, it's really jumping. So we have a good number of properties that are on the market. And looking at the period of time, so when the pandemic hit, we had more properties coming on the market in San Francisco, and Q3 we're at higher than any of the previous couple of years. Now, the percentage of luxury home listings accepting offers or selling, this is an interesting slide. So we can see that the single family homes, they're selling at higher percentage or higher rate than the condominiums. So the single family homes, we're talking about 3 million plus value, and the condominiums is 2 million plus. So we are at almost 17% of the properties of the luxury condominiums coming on the market is selling. And for the single family homes, we're at 30%. Now, this is the chart that I told you about, which is the properties that are expired or withdrawn from the market. So the number of these properties is increasing because we can see that in San Francisco, the activity is slightly slower than previous months and a year over year. And because we have a strong sellers, they're more willing to wait for the property to sell at the right price or at a reasonable price rather than selling it at a low price. So this is, although we wish that there is more activity, stronger demand in San Francisco, yet this is a good indicator that we still have a strong property values. They're holding up very strongly in the area. and hopefully there will be more demand. So this is in general what's happening in the US and specifically in San Francisco County, sorry, in San Francisco. I hope that this was helpful for you to give you some information about what's happening in your real estate market. And if you would like more information about your particular property, your neighborhood, your district, whether to sell or not to sell, it's a very interesting market. How to sell if you want to go on the market, please feel free to reach out. I'll be more than happy to give you more detailed information. I'll leave you now. Please be safe and have an amazing weekend.